What's up, everybody? How's everyone? Excuse me. How's everybody doing? Everybody ready for the press conference? We've not seen that much. Momentum and volatility yet. We saw some, of course, but I think we're going to get a hell of a lot more. A hell of a lot more volatility in a moment. Let me know if the audio is okay. By the way, how's everyone doing? I'll quickly check out the stream, see if it's doing good, and then I will try to find the live stream of the Federal Reserve, and then we will get to the we'll do some analyzing. I think we'll take a look at Bitcoin, we'll take a look at Ethereum, what's possible, see if some cryptos are outperforming some other cryptos. It's okay. Okay, that's good. All right, so as you can see right now, we're going to grab a clean chart because this doesn't look like shit, obviously. If we take a look at this one, that's better. Dollar Strength Index is not reacting well to that news. So for everybody that missed it, the interest rate went up from 4.75 to 5%. The interest rate projection is a little bit higher than previously, obviously, but the other kind of things have already shifted down towards a little bit more of a bearish outlook. So I think that could be interpreted as bullish. Altogether, I think this we got some very short bullish momentum. It's not definitive because if you take a look at Bitcoin right now, you can see that we spiked up, sure, but afterwards we also dropped back down again. So here you can see that we spiked up towards 28,800. Almost hit that 29,000 mark, and then we drop back down again. So altogether, if you take a look at the 15-minute time frame, 15-minute time frame really is where it's at, and there you'll find the most movement. There you can see that we spiked up, spiked down, and now we're relatively bullish. But usually crypto is always a bit bullish if the outcome is just as expected, because it's just one event that could be bad, less, right? Yeah, that's I'm not sure if we are bearish, to be honest. It really depends. I wrote no, but I mean it wasn't priced in. It wasn't priced in that we would get a hike pause. It was this was priced in, I think, and the market is reacting very much to that it's priced in. I think the key will be in that press conference we'll have in a moment. There they'll talk about why they made this decision, whether they're going to pause it afterwards or whether they will keep increasing it. I think they will. To be honest, I think that if they will pause it, which I think the most likely scenario is coming out of that press conference, I think we can actually be bullish. Right now, our main resistance level is if we like are very specific. It's this level right here around 28,750. I think we can actually break above that, and then we're starting to look at levels like 30,000. I mean, right now, especially that 30,000 level also has a 2.618, which we respected quite a lot when we reached that with the initial bullish momentum, the 14th of March, a little bit over a week ago. So I think 30,000 with that psychological level as well is really the first level we can get to if they say that they're going to pause the rate hikes. But that's something we obviously don't know yet. So audio is ADA long. Yeah, how are other cryptos holding up? How's XRP? How's Ethereum doing? I think I said this as well earlier today. Usually most cryptos just move along with Bitcoin, but are a little bit less volatile. Like Ethereum is actually just bearish, right? Ethereum did not even break its highs that it hit last Saturday. XRP is just XRP found some support at that 0.5 FIB, but apart from that, not a lot. ADA, I don't have an ADA chart. Let's see. I took a long trade at DOT. I said it in the trading signals group that I would long from 6.14, which is a nice trade, but to be honest, it could just hit entry straight away. It hit on BYBIT. It did not hit on Binance, as you can see, but I longed from this area. So it was a nice entry, but again, a lot can happen. It could just go down to entry, and I would lose out. That's part of the game. Ajax. Yeah, the risk for Bitcoin right now is that they say that they're just going to continue the monetary policy as they're doing right now, right? So if they propose, I think that if they're going to say that they're going to hike it more towards 5.25, 5.5, I think that's going to be very bearish for crypto. And then we could drop down quite a bit, to be honest. Yeah, Luca, I'm not sure if they will pause it either, but yeah, I mean, I'm expecting it with the whole banking crisis that is looming. It almost feels like they would have to at least say something about adjusting the monetary policy, that it would become a little bit less hawkish. Because right now, technically, it's still very much hawkish. But it's in 5 minutes, so I'll have to find a live stream. I know that we can just find it on Federal Reserve Live. I know we can just find it live right here at their own website. If that's, yeah, right here. No, not right here. Let's see about the Fed, news and event, press releases. Yeah, so this is today. It's not live yet. As you can see, we're going to turn that volume down. But I would much rather, I would much rather find a YouTube stream. If somebody has a YouTube stream of the interest rate, then we'll take a look at that, because we also did that last inflation rate. Or no, excuse me, with the testimony of Jerome Powell, and that was actually pretty cool. Fed swap says 63% of point. All right, well, that's yeah, no, okay, but that's also good news somewhere, because that does mean that the market expects another hike. But we'll see, because then if they are still pausing it, it would actually be very bullish. But yeah, we were already kind of expecting that. So let's take a look at whether I can find some sort of a live stream about... oh, yeah, there it is. The algorithm is great, isn't it? It was on my home screen right away. And what I'll try to do is I'll try to put some subtitles, auto-generated, works, I think. Yellow with the window color. Yeah, I think these are fine. So we can actually watch it here, hopefully. I hope that it's very much live. This is it's starting in 5 minutes, probably a little bit later, but we'll see. Let's see, can I hide the chat? Yes, I can. I will not put it on full screen yet. Yeah, it's in 4 minutes. The market is very quiet right now. If we take a look at Bitcoin on the 1 minute time frame, I think we're barely moving. But we'll follow it live on the 15-minute time frame. And during the press conference, we'll just look at it together, and where I think it's handy, I'll say some things about, well, what he said here is bullish, or here it's bearish. Yeah, I found thanks guys. I found a link already. Let's see, STX. Some people were talking about STX. STX must be bullish right now. It's so correlated with Bitcoin. Oh, yeah. I said this morning that if we would be able to break above. It's a little bit of a weird chart, because I'm streaming on my laptop right now. I'm at my parents' house, so don't have the best equipment. Yeah, STX is just waiting. STX is just waiting for a move of Bitcoin, right? It's not doing that much. And Ajax, same story. If we take a look at Ajax right now, if we zoom in, you can see that we're finding resistance at 52 cents. If the outcome is bullish, we'll go up to 60 cents, right? It's very much possible. And if it's bearish, we'll drop down all the way to 43 cents. So we'll just have to wait right now. There's not a lot of movement in the markets, not a lot of big things happening. We'll just have to see. So we'll grab the chart of Bitcoin. Let's see if it's already starting. You'll have to let me know if you can actually hear it. Can you hear this already? Okay, I'm going to pause the audio right here, because it felt like it was pretty hard, but I'll make sure to have it at the right audio when it actually starts. Yeah, what we'll do is we'll first take a look at this live stream, and then afterwards we will we'll take a look at some charts, at some cryptos. That's always fun to do. So then we can take a look at Clayton, CFX, hold it, please, and remind me when we're starting with the analysis part. But I'm not sure how long this press conference is going to take. Usually, I believe that it takes about well, it's a very maximum 30 minutes. I'm not. I'm not. I don't want to spend 30 minutes watching Jerome Powell on my Wednesday evening. But yeah, we'll just usually the beginning 5 minutes. The first 5 minutes are the most important ones. So I'll make sure to have the audio all right. Okay, let me know. I'm going to put on the audio. Let me know if it's not too loud. I'm going to check it myself as well, but you can there's already some sort of a soundtrack going on. I'll quickly do this. I think that's better. All right, I'll check it for myself as well. Yeah, I'll be right back. I'm going to grab a glass of water, and then we'll back. Hopefully they haven't started yet then. But yeah, otherwise it's just a shame. We'll miss the first 30 seconds. Alright, see you later. All right, we're back. Ready. It always takes. It's always delayed by like 2 minutes. Everybody's still here. Yeah, about 70 people. 70 people tuning in. Yeah, we'll take a look at some cryptos afterwards, guys. Right now, my main focus is on this interest rate on this press conference. Oh, there it is. There it is. Let me know if you can. Okay. Before discussing today's meeting, let me briefly address enjoy it, guys. In the banking sector. In the past 2 weeks, serious difficulties at a small number of banks have emerged. History has shown. Let me know if the audio is alright. Otherwise, there's also subtitles. Can undermine confidence in healthy banks and threaten the ability of the banking system as a whole to play its vital role in supporting the savings and credit needs of households and businesses. That is why, in response to these events, the Federal Reserve, working with the Treasury Department and the FDIC, took decisive actions to protect the U.S. economy and to strengthen public confidence in our banking system. These actions demonstrate that all depositors' savings in the banking system are safe. With the support of the Treasury, the Federal Reserve Board created the Bank Term Funding Program to ensure that banks that hold safe and liquid assets can, if needed, borrow reserves against those assets at par. This program, along with our I cannot put it louder than this, guys. Is effectively meeting the unusual funding needs that some banks have faced and makes clear that ample liquidity in the system is available. Our banking system is sound and resilient with strong capital and liquidity. All right, so I'll be a little bit silent. I'll chip in when I think something interesting is being said, something interesting for crypto at least. In addition, we are committed to learning the lessons from this episode and to work to prevent events like this from happening again. Turning to the broader economy and monetary policy, inflation remains too high and the labor market continues to be very tight. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all.
The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. Consumer spending appears to have picked up this quarter, although some of that strength may reflect the effects of swings in the weather across the turn of the year. In contrast, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. As shown in our summary of economic projections, the median projection for real GDP growth stands at just 0.4% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. And nearly all participants see the risks to GDP growth as weighted to the downside. Yet the labor market remains extremely tight. Job gains have picked up in recent months, with employment rising by an average of 351,000 jobs per month over the last 3 months. The unemployment rate remained low in February at 3.6%.
Nothing bullish or bearish until now. He has said these things earlier.
Some signs of easing. However, with job vacancies still very high, labor demand substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on wages and prices. The median unemployment rate projection in the SEP rises to 4.5% at the end of this year and 4.6% at the end of next year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in January, total PCE prices rose 5.4%, excluding the volatile food and energy categories. Excluding those, core PCE prices rose 4.7%. In February, the 12-month change in the CPI came in at 6%, and the change in the core CPI was 5.5%. Inflation has moderated somewhat since the middle of last year, but the strength of these recent...
This is Bitcoin right now.
...that inflation pressures continue
dropping down.
The median projection in the SEP for total PCE inflation is 3.3% for this year, 2.5% next year, and 2.1% in 2025.
All of this he has already said. So,
inflation back down to 2% has a long way to go.
Ooh, that is bearish. That's bearish.
Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely
We're dropping quite a bit now.
Imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective.
This is bearish.
At today's meeting, the committee raised the target range for the federal funds rate by a quarter percentage point, bringing the target range to 4.75% to 5%.
Bitcoin right now.
Process of significantly reducing securities holdings.
Oh shit.
Since our previous
it's not good.
Economic indicators have generally come in stronger than expected.
This is
Greater momentum in economic activity.
again bearish.
We believe, however, that events in the banking system over the past 2 weeks are likely to result in tighter credit conditions for households and businesses, which would in turn affect economic outcomes. It is too soon to determine the extent of these effects, and therefore too soon to tell how monetary policy
A bit bullish, perhaps.
As a result, we no longer state that we anticipate that ongoing rate increases will be appropriate to quell inflation.
Oh.
Instead, we now anticipate that some additional policy firming may be appropriate.
Oh wait. What did he say?
Monitor incoming data and carefully assess the actual.
He said no more rates, right?
Tighter credit conditions on economic activity, the labor market.
I missed it.
Decisions will reflect that assessment. In our SEP, each FOMC...
Did he say that, if someone can go back, did he say that no more rate hikes were appropriate? Perhaps? Because that's bullish.
If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.3% at the end of 2024, and 3.1% at the end of 2025. These are little changed from our December projections, reflecting offsetting factors. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation. We remain committed to bringing inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening in labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run.
Well,
to conclude, we understand
okay.
that elections affect communities, families, and businesses across the country.
A bit mixed, to be honest, the results.
We at the Fed will do everything we can to achieve our maximum employment and price stability goals.
Yeah.
Thank you. I look forward to your questions.
Yeah, it's a bit mixed. I mean, he said, I believe he said about the rate hikes that they don't need to increase the rates anymore, which is bullish. But they have said that with the banking crisis, that they expect that will already do quite a bit in terms of that it will battle inflation.
So, I guess our view is that the banking system is sound and it's resilient. It's got strong capital and liquidity. We took powerful actions with Treasury and the FDIC, which demonstrate that all depositors' savings are safe and that the banking system is safe.
I actually think this is bullish, which is a weird thing to say if we're dropping down like this.
Stress and the uncertainty that you've also alluded to in the statement, how seriously was a pause considered for this meeting?
So we did consider that in the days running up to the meeting, and you see the decision that we made, which I'll say a couple things about. First, it was supported by a very strong consensus, and I'll be happy to explain why. And really it is that the intermeeting data on inflation and the labor market came in stronger than expected, and really before the recent events.
Yeah.
We were clearly on track to continue with ongoing rate hikes. In fact, as of a couple of weeks ago, it looked like we'd need to raise rates over the course of the year more than we'd expected at the time of the S&P in December.
Yeah, that's true.
We are committed to restoring price stability, and all of the evidence says that the public has confidence that we will do so, that we'll bring inflation down to 2% over time. It is important that we sustain that confidence with our actions as well as our words. So we also assess, as I mentioned, that the events of the last 2 weeks are likely to result in some tightening of credit conditions for households and businesses, and thereby weigh on demand, on the labor market, and on inflation. Such a tightening in financial conditions would work in the same direction as rate tightening. In principle, as a matter of fact, you can think of it as being the equivalent of a rate hike, or perhaps more than that. Of course, it's assessment today with.
Okay, the thing is, I'm going to talk through him. Well, all right, no. I'll let him talk for a little.
Guidance, as I mentioned, from ongoing hikes to some additional hikes, maybe some policy firming may be appropriate. So,
okay.
As I mentioned, in assessing the need for further hikes, we'll be focused, as always, on the incoming data and the evolving outlook, and in particular on our assessment of the actual and expected effects of credit tightening.
See, all right, I'm going to cut out the sound now, but I'm going to explain to you why I think that's could be considered as a bit bullish. Because essentially what he's saying is that with the situation about the banks now in the West, in the US, and but also in the EU with Credit Suisse, basically that means that they will tighten their credit, right? So that's what he said. So that means that businesses, but also people, cannot easily gain access to money. They cannot gain credit. They need credit to do big purchases, to do big projects, investments. If a lot of people do that, you get more inflation. So if less people have access to credit, that also battles inflation, the same as that rate hikes do. So that's why he's saying that they need to, that they might increase the rate hikes, but only if the economic data shows that they need to. So why that's bullish is because if they do not, he's practically saying that it's a semi-pause, right? So it's a conditional pause. They will pause it if the economic numbers that will come out in the next month kind of point towards disinflation. So there's a chance at a pause. And then what we have already seen in the last couple of days and the last 2 weeks is that with the whole banking crisis, we've seen a massive bullish momentum coming into Bitcoin. So now you have that banking crisis plays a prominent role. That's bullish for crypto, but it's also battling new rate hikes in that it's some sort of a rate hike in itself, which is also bullish for crypto. So until now, I mean, we'll take a look at what more they're going to say, but until now, I'm fairly bullish. I'm fairly neutral. Let's say it like that. I'm not overly bearish as I think a lot of people are right now. Yeah, he said that the process of getting inflation down has a long way to go. It will be bumpy. That's just true. As he said as well, the unemployment rate will go up quite a bit. The unemployment rate will go up by more than 1% in the US. That's millions and millions of people, right? So yeah, it's probably not going to be bullish. But all right, let's see if I can. Let's see what we can get right now.
Number of people saying that they anticipated there would be some.
Where are the subtitles?
Conditions, and that would really have the same effects as our policies do, and that therefore they were including that in their assessment, and that if that did turn out not to be the case, that in principle you'd need more rate hikes. So some people did reflect that.
Is the stream still good? Because I can see. Oh wait.
There may also just have been. Remember, this is 12 days.
No, the stream seems alright.
Something that just is so recent, and it's people. You know, it's very difficult. There's so much uncertainty. So December was a good place to start, and we wound up with very.
Bitcoin is dropping though. So yeah.
You know, in a way, the data in the first 5 weeks of the intermediate period pointed to stronger inflation and stronger labor market. So that pointed to higher rates, and then this latter part, kind of the possibility of credit conditions tightening, really offset that effectively.
To follow up, have you considered at all whether your primary tool, the funds rate, is going to be enough to sustain the kind of tighter financial conditions that you believe will be necessary without doing significant damage to the banking sector? Have you, for example, considered changing reserve requirements, selling assets out of the system, open market account, as a way to better achieve tighter financial conditions that don't accelerate deposit erosion, for example, from banks?
You know, we know that we have other tools in effect, but no, we think our monetary policy tool works, and we think, you know, many banks, our rate hikes were well telegraphed to the market, and many banks have managed to handle them.
Hi, Victoria Guida with Politico. I wanted to ask, you, along with the FDIC and the Treasury,
Interesting though.
decided to invoke
Yeah, we're bouncing a bit in terms of Bitcoin.
to be protected at these two banks. And I was just wondering if you could speak to why that decision was made. Was it purely a confidence issue, or was there a concern that there would be some sort of economic contagion or financial contagion from the failure of these banks?
The issue was really not about those specific banks, but about the risk of a contagion to other banks and to the financial markets more broadly. That was the issue.
Okay, and then can you also, just to follow up, can you speak to the role that you will be playing in the Fed's internal investigation on its supervision and regulation?
So Vice Chair Barr is of course leading that review, and he's responsible for it in his capacity as Vice Chair.
And we're bouncing a bit, as you can see.
I realized, right away that there was going to be a need for a review. I mean, the question we were all asking ourselves over that first weekend was, how did this happen? And so what we did was early Monday morning we sat down and said, let's do this, and he was obviously going to lead it in his capacity. So I don't, my role was to announce it, and I get briefed on it, but I'm not involved in the work of it.
Chair Powell, Howard Schneider from Reuters. So I want to go back to your February press conference. You mentioned the word disinflation, I believe, 9 or 10 times, a process that you felt was, I forget the word you used, but gratefully underway or something like that. Is disinflation still occurring in the U.S. today?
Yes, I mean, what actually happened, Howard, was I got the question 12 times, so maybe it's a feature, not a bug, but yeah, absolutely absolutely the same. The story is intact. So it's really three parts, right? Goods inflation's been coming down now for 6 months. It's proceeding more slowly than we would have liked, but it's certainly proceeding. Housing services is really a matter of time passing. We continue to see the new leases being signed at much lower levels.
I think we have heard everything.
4% of the core PCE.
I think we have heard everything we need to know.
Where we didn't have inflation, we still don't have now, is
I'm not sure though. I mean, it depends on what kind of questions are being asked. Do you think we have seen everything we need to know? Because somewhere I'm just tempted to just check out some charts and then go on with work.
The inflation data that we got, to your point, really pointed to stronger inflation.
If I could follow up on that, I was curious why you don't see more coming from the credit crunch, because it seems to me that's something that you'd actually welcome to a degree and expect. And are you not seeing more coming from that because you don't know, or because you just don't want to have another round of wishful thinking?
So it's really just a question of not knowing at this point. There's a great deal of literature on the connection between tighter credit conditions, economic activity, hiring, and inflation. Very large body of literature. The question is, how significant will this credit tightening be, and how sustained will it be? That's the issue. And we don't really see it yet. It's so people are making estimates. People are publishing estimates, and it's very kind of rule of thumb guesswork almost at this point. But we think it's potentially quite real, and that argues for being alert as we go forward, as we think about further rate hikes. For us,
Yeah, they're just going to be very pragmatic about it, which I think is a good thing. But it also means that all of the interest rates in the next couple of months will be very interesting and quite volatile, probably.
Hi, Chair Powell. Gina Smilik from the New York Times. Thank you for taking our questions. I wonder if you could talk a little bit. I know that you've got your internal review coming, but I wonder if you could talk a little bit about what you think happened with oversight at Silicon Valley Bank, and whether this suggests that something about regulation and supervision needs to actually change going forward. And I wonder, how can the American people have confidence that there aren't other weaknesses out there in the banking system, given that this one got missed, as you noted?
So let me say what I think.
It is interesting, though.
To questions around supervision.
I think things like these are interesting, but yeah.
Silicon Valley Bank management failed badly. They grew the bank very quickly. They exposed the bank to significant liquidity risk and interest rate risk. Didn't hedge that risk. We now know that supervisors saw these risks and intervened. We know that the public saw all this. We know that SVB experienced an unprecedentedly rapid and massive bank run. So this is a very large group of connected depositors, concentrated group of connected depositors, in a very, very fast run, faster than the historical record would suggest. So for us, for our part, we're doing a review of supervision and regulation. My only interest is that we identify what went wrong here. How did this happen is the question. What went wrong? Try to find that. We will find that.
Yeah, I think we've seen it, to be honest. It's all very interesting, but it's not going to affect crypto that much. I think he said everything about the monetary policy. So let's talk a little bit about the markets. So I'm going to repeat what I said, which hopefully it's not too annoying. What he said about the monetary policy is that they will basically check it out meeting to meeting. All right, they will take a look at all of the economic numbers. If you want to know more about those economic numbers, I cover everything of that in the normal group, in the signal group. We discussed that. But things you should take a look at is jobless claims, retail sales, unemployment rate. Those type of things all can point towards either more inflation or less inflation. That's what they'll take a look at, but they'll also take a look at the pressure on credit that the whole banking crisis has. Those are the main two things they'll take a look at for every different interest rate decision. And inflation rate, by the way, is obviously also a very important number. And based on that, they're either going to have another hike or not. So what that means for crypto right now is, I think that it's not that bearish. It's not super bullish, but it's also not that bearish. And we have already had a lot of bullish momentum, which in my opinion comes from other sources than only the economic circumstances. And that's why I'm still fairly bullish on Bitcoin and on crypto. But Bitcoin has by far been the strongest crypto out there. So yeah, that's my take. I mean, we'll still have to see. I mean, technically, if we really do a technical analysis, which honestly I think is crazy, you cannot do a technical analysis in circumstances like these. But if we were to do one, what I would say is that we're right now in this kind of block between 28,750 as a resistance, and then as a support 27,850, and we're going to break out of one of those two in the next night. All right, at least night for me. It might be morning for you. It could also be afternoon, but that's what we're going to do. So we're either, if we can break above 28,600, 28,750, we're going all the way up to our next resistance level around 29,500. If, however, we're going to drop down and we'll get a bearish breakout and we'll drop down to 27,500, we'll probably consolidate there and get a little bit more of bullish momentum. So we'll still have to wait how the market really reacts to this news. But as I said earlier as well, I'm right now a little bit more bullish on that. What do you mean, practical countries? Because the Federal Reserve, I mean, they don't know what they're doing, but it is based on things, and we'll just have to take a look at what happens. Bullish or bearish, it still depends, as I said, just in the last couple of minutes. It depends on how the market reacts to that. I would say we're stable for now, and we will see if we can get some more bullish momentum from the market or not, because most of the momentum in the market in the last week and a half has been bullish. So that's why I'm leaning a little bit more towards the bullish side. And because overall, I think the outcome of the interest rate is just very neutral. But yeah, we'll just have to wait for that. Unfortunately, I won't be trading, at least 100% for the next night. Tomorrow we'll have some more clarity, and tomorrow in the Bitcoin videos and Ethereum videos, so I'll also do somewhat more of an analysis. Hopefully, then we can say a little bit more about that. Have some of you actually participated in the Space ID launchpad, by the way? It's now at around 40 cents, $360 million in volume. This was on the Binance launchpad. Yeah, Bitcoin is falling a little bit, but I mean, I would only be afraid of Bitcoin if we fall down below 27,500. Right now, I really don't think there's any problem. But yeah, we'll have to check that out. Some people are asking for Filecoin to be analyzed. As I said, I mean, analyzing right now, there's so much it depends on. I can, to be honest, I can barely do this right now. It just depends on what will happen tonight. I'm sorry, but that's just how it is. I mean, for Filecoin, we'll just consolidate. And if Bitcoin becomes bullish, then we'll actually break above this level right here around $6 and trend up to at least 6.6, 6.5. But if Bitcoin becomes bearish, we'll drop down. It just, right now, we need to get some sort of a sense of direction in the markets. And if we don't have that, which in my opinion, we do not have that yet, then I cannot say that much about that. And I will definitely not analyze it more if you spam it. No, I just said I cannot do price predictions on FTT right now. It just makes no sense, in my opinion. So yeah, I think we've seen everything. I don't think we're missing anything with the press conference right now. It's interesting to watch though, so if you're interested in that, I would definitely recommend you to check that out. Bitcoin right now is a little bit further away, so to kind of end the stream, as I said, I think we'll stabilize here. I think the overall picture is still bullish, but that does depend on what we do in the next 24 hours. So the only way I would actually start worrying about Bitcoin is if we really break down below 27,300. If we do that, that's quite a significant bearish breakout, and then we might actually get some more bearish momentum. But breaking through that, even though it's realistic, is not what I expect for now, to be honest. It's realistic though, so it's something you should take into consideration. But overall, I think we'll stabilize. And then, as I said, over the long term, we'll either break above 28,750 or break down below 27,500, 27,300. But I will be in time to cover that in my Bitcoin video tomorrow, I think. So yeah, that's the stream for now. When can we at least predict the curve for altcoins? What do you mean for... I think tomorrow you'll already have somewhat more of a direction, but right now it's just too early. Those 12 hours after the interest rate are always so volatile and full of direction changes. So yeah, yeah, that's it for now, guys. I enjoyed it. I enjoyed watching the interest rate live together with all of you. As I said, tomorrow I'll be back with more videos. If you want to see some, if you really want to see some videos, let me know. Make sure to check out the Telegram group as well. And in the Telegram group, if you take a look at the pinned message, I just sent the link of the Telegram group in the comments. If you check the pinned message, you can also check out how to join the Signal group. You're free to ask other people in the chat how the Signal group is. I'm trying to be transparent about that. We've been profitable 4 out of 5 weeks so far. So check that out if you're interested in daily trading signals, market updates, that kind of stuff. But for now, this is the stream. So thank you for being here. Thank you for being an awesome community and watching this interest rate together with me. But for now, I want to wish you all either a great night for everybody from the East, a great evening for everybody here in Europe, and just a great day for everybody watching and tuning in from the US. So thank you for watching, and I will see you all tomorrow.